Welcome back to Global Money Talk live from the New York Stock Exchange. Harnessing the potential and power of big data is easier said than done. In order to make informed decisions and gain a competitive advantage, companies need to translate massive data into decisions that enhance performance. Well, joining me today for a discussion on data, AI, and delivering real value to businesses is Alex Vayner, founder and managing partner at Martingale Insights. Alex, happy Monday. Thank you so much for joining us. So first and foremost, we'd like to hear about your background and your current firm.
Sure. Thanks again for having me. So Martingale Insights is a growth partner for B2B AI startup. And I'm based out of Israel, the startup nation. And the idea is to work directly with founders across the world and help them drive sales, and at the same time create a really compelling strategy that helps them navigate the very complex enterprise sales cycle. So less of a consultancy, probably best way to think of us is a GPS for AI startups in the enterprise jungle, and helping them avoid the quicksand of long sales cycles and the various rapids that they face when they get to procurement, et cetera.
And Alex, I understand that you've spent many cycles in the space. So can you give us an understanding of where you think we are right now?
Yeah, I think that overall we are in the midst of the AI revolution. I think that the acceleration actually took another uptick with generative AI coming out, and that's created a lot of buzz. It's also created a lot of misconceptions in the marketplace. So I think now we're perhaps, to quote Churchill, we're, not at the end, but not at the end of the beginning, but maybe the start of something new. And I think right now, especially, it's really important to understand value and to get away from misconceptions as an investor, understand what are the right moves.
And when it comes to artificial intelligence, this is not something new and actually something that has been around for decades, but it has been getting a lot of attention when it comes to the retail investor. And we've been seeing the AI space become a lucrative investment. But as you mentioned, there are a lot of misconceptions when it comes to artificial intelligence, and you have been in the AI game for a while now. So can you dispel some of the myths out there and tell us what you think some of the biggest misconceptions are?
Sure. So I think probably overall the biggest misconception is that AI is some kind of a magic wand that a company can simply point it, say Expelliarmus, and value is created. And investors often think that simple mention of AI can automatically lead to a solution to a problem. And in reality, in my experience, AI really is like a teenager. There's a ton of potential, but it needs a lot of guidance. It needs a lot of structure. This especially resonates since I'm a father of three teenagers. So it's really not about having AI per se. It's about implementing it strategically and really quickly leveraging it to create value. And value, as most of I think your audience would know, the definition of it hasn't changed. It's still reducing costs, mitigating risks, driving top-line growth, maybe mitigating, reducing costs, and then improving customer experience, perhaps. So what we really want to do as an investor is to look at how is a particular company leveraging AI to do those things. I guess one way to think about it is, one of the AI pioneers, Andrew Ng's famous for saying, AI is the new electricity. So there's a lot of comparisons and analogies, helping people understand what AI is and how it works. But here, I think Andrew's spot on in the sense that Yes, electricity transformed industries, but in order for it to do that, it required proper infrastructure, applications, and the same is true for AI. AI needs strategic implementation in order to realize its full potential.
And I really like that analogy there when it comes to teenagers. And I think it's also helpful to hear about that analogy of AI being compared to new electricity. But two terms that just stood out to me, Alex, while you were explaining this to our viewers regarding misconceptions is strategy and leverage. So could you expand on this?
Sure, absolutely. So the best way I think about is I think of it in terms of the three P's, process, people, and proof. So first, when it comes to process, what I mean by that is AI integrated into the core business of the company? Or is it just a side project because the CEO heard about this new technology and wants to put a line into the quarterly earnings report? Second, it's people. Do they have the right talent? And when I talk about talent, it's not just the machine learning engineers and data scientists, but it's also business translators, people that are going to help connect the data science and the insights to the actual business applications, because that's where real value is created. And I would say the last part is the proof. And what I mean by that is, can you show measurable results? So it's not just about the buzzword in the earnings report. It's really about use cases and KPIs. It's probably not a bad analogy to compare this to any winning sports team, right? You need a process, that's your playbook. You need people, right? You need skilled players in the right position, doing the right things. And ultimately, you need a track record of success. That's proof. So all those things coming together will really help you evaluate whether a particular Fortune 1000 company is a pretender or a real game changer. And really showing how AI is improving efficiency, improving customer experience, creating real revenue drivers, and essentially creating value. And one probably easy, quick fix that's a tell, in my experience, is if the CEO cannot really explain the AI strategy and is simply using buzzwords like this is a revolutionary technology instead of talking about concrete results, that's a good sign that this is not a company that's creating real value in the enterprise.
That is something that I will definitely keep in mind when it comes to the messaging regarding AI from any CEO. But I'm glad you mentioned the three Ps, people, process, and proof, because I think that is important. And sometimes when we think about artificial intelligence, there's this concern that perhaps people will be eliminated from the equation. But this isn't quite true, is it, Alex?
No, I think that while people will really move and transform from the roles that they do today to different roles, and that will allow a completely different approach to how value is delivered. So it's not that the roles are completely going away. It's that they're getting repositioned and value will be created in a different way. And the truth is that the people that will succeed are the people that are able to adapt and change to the new trends, to the new technology. And I think that's where, as a corporate entity, it becomes really critical to not only implement the strategy of AI and the technology of AI, but also bring in the people. And that means training for your engineers, training for the business people, training for really the executive leadership team on how to best use AI to make the better decisions that will create value for the company.
And speaking of creating value for the company, how can investors separate the contenders from the pretenders in this space within the Fortune 1000?
Sure. So I think one of the ways to do that is really to look at the core KPIs. We talk about KPIs, and really the best way is to, I think of it again as a trifecta, if you will, of a couple of factors. One is operational efficiency. So essentially looking at the metrics like cost reduction, process acceleration, resource optimization. Those are the things that you want to look for in the news, in the earnings reports, that will actually give you insight into whether AI is being leveraged in reality and at scale. Second one is customer impact, right? So this includes any kind of improvements in customer satisfaction, usually measured by customer satisfaction surveys. It can be used by looking at customer retention rates and also at the customer experience. And really a big change in that has been the personalization of the customer experience and how effective that has been. The third factor that I think becomes really important is obviously financial performance. So the idea is, can you actually connect AI to some kind of revenue growth, to some kind of ROI calculation for a particular AI project, or perhaps a new product success rate? So these are the core KPIs and factors to keep in mind. But here's the kicker. I think that these metrics really need context. So a 10% efficiency gain for one industry might mean very little for another industry. So I'm always looking to benchmark against industry standards. So I'll give you an example that's recent that probably most of your audience heard, that Netflix had reported really great results in in their last quarterly earnings call. And we all know that Netflix is probably one of the pioneers and optimizers of what we call the recommendation engine, right? So this is, if you like this film, you'll also like this film. They really have popularized recommendation engine, and it's actually a really great way for them to actually retain talent, retained customers. And I think that there have been calculations that they have attributed about $1 billion annually, if I'm not mistaken, in customer retention to the recommendation engine. The idea that I can keep watching and that Netflix knows better than I do myself sometimes what I will like and what I will not. So the reference for what constitutes great recommendation engine from Netflix will be very different from, let's say, another industry. As an example, one of my clients was a large US steel manufacturer. Their challenge was to find a recommendation engine for their sales team to increase the share of wallet. So what we did is we developed a machine learning based approach. We integrated alternative data from the outside, and we were able to essentially spot trends. So for example, if they were selling steel to an automotive manufacturer and the automotive industry took an increase in overall production by 20%, well, they should expect that they should increase their total sales by 15, 20, 25%. And if they're not offering that to their customers, that means that likely their customers are getting it from somewhere else. So this is an example of using a recommendation engine in industrial manufacturing and steel manufacturing, but here the numbers are quite different. We expected a lift of about 1%. And for them, that really meant $100 million in incremental revenue. Again, a very specific financial metric that can be measured and that came strictly from the recommendations that were given to the salespeople, specifically as they're engaging with customers. So context is king, knowing the benchmark in the industry and always looking for what is the financial performance, what are the customer impacts that are in play, what are the operational efficiencies that you see.
Yeah, and as you highlighted, there's so many moving parts, and I think metrics do indeed need context. So I think it's very helpful that you brought up Netflix. So earnings season is underway here in the US. We're keeping an eye on how these companies perform, and more importantly, their forecast and guidance going forward. So whether we're talking about Netflix or a steel company, we know that industries obviously matter when we're talking about KPIs and numbers. For example, if we're talking about CPG companies here in the US that have presence overseas because they're multinationals, it's very important to take into context economic data as well as inflation figures. And I'm sure this comes into the equation when you're doing your analyses. So can you also give us more examples when it comes to KPIs that investors should be looking at to assess how effectively a company is leveraging artificial intelligence?
So I think that the core ones I would say are, again, looking at the value, looking at the indicators in operational efficiency, customer impact, and financial performance. And that trifecta really maps to top line growth, customer engagement, and cost reduction, and in many cases also risk mitigation. So really, the best way in my experience for an investor to evaluate this is to look at the industry where they have the best expertise, because that will allow an investor to see more clearly where the value was in fact created and how it was created. So if you've been investing in the steel and industrial manufacturing industry for a long time, you actually know what the financial performance metrics are. You actually know what customer engagement looks like in your industry. So if you see an uptick from a player and you at the same time hear that this particular company is investing in AI, and you hear that their CEO is talking about investments in a very specific way, this is a great sign that probably they are doing things right, because you actually see the improvements in their financial performance, and you can evaluate that against their historical performance. You can also evaluate them against their competitors in the industry. Again, it all boils down to focusing on the context, focusing on the industry that is the most important, that you know best. And that's where I think an investor can really generate alpha with AI.
And you've mentioned industries, so I do want to move on to sectors that you think are ripe for disruption. I understand over at Martingale you have conducted many case studies, which do seem very fascinating because you do outline the problem, the solution, and outcomes that you have analyzed. So give us an idea of which sectors you think are ripe for AI disruption that you think investors might be overlooking.
Sure. I think that perhaps to start, one of the things that's been incredible about AI is how it's impacted every sector that you could possibly think of, from financial services to pharma to industrial manufacturing. I think that probably healthcare and pharma presents one of the most interesting opportunities. It's an industry that's been relatively slow to adopt AI, and the reason for that has been really regulatory hurdles, right? Data privacy concerns, and overall the industry's resistance to change. And I think that all of that is shifting, and you see tremendous amount of new focus, especially in startup space, but also by large payers, providers, and pharma companies on topics like precision medicine, right? Can you use AI to analyze genomic data? Things like medical imaging, can deep learning neural networks really be used to look at X-rays and MRIs and detect some kind of anomalies and help radiologists predict more accurately real serious problems that they're investigating. And new drugs, drug discovery, drugs, companies spend billions on R&D every year. And we now know that AI can accelerate the drug discovery process and really predict a lot of target interactions between drugs and optimize drug candidates and improve clinical trials. And that's a huge area that I see beginning to open up. So overall, there is not one sector that I would say is the only one where AI is making the biggest impact. And again, I would say that as an investor, the most important indication is the creation of value. And therefore, I want to be focused on an industry where I can assess value best. So if I am historically investing in healthcare, this is a great opportunity. But if you're really focused on fintech, there are tremendous opportunities in fintech as well. And that's where you as an investor will probably have an edge on most others because you know the industry best. So that's probably, a good sense. But of course, consumer packaged goods, what you mentioned, Remy, retail, another area where, the industry itself is under attack, as we know, and under a lot of pressure to perform. And of course, AI is being used by retailers to really differentiate between winners and losers.
Yes, I think it was very helpful for you to provide that overview when it comes to healthcare because, of course, there are regulatory concerns involved with this. And I think when it comes to CPG companies, we know there are so many challenges there, especially when we think about what's happened in the U.S. just in this month alone when it comes to port strikes as well as extreme weather-related events. And I'm sure that moving forward, we may see more than we have seen in the past when it comes to extreme weather events, and that can obviously affect the supply chain. But before we move on, I do want to ask you about utilities very quickly, because when we look at how that sector has performed within the S&P 500 this year, it has been outperforming most sectors with the exception of information technology and communication services. So within the S&P 500, utilities are seeing a year-to-date gain of about 30%, and that is quite significant. But when it comes to the utility sector, when you're looking at, say, a U.S. utilities operator and you're trying to work on a system, what are some of the challenges as well as opportunities there?
Sure. So I think probably the application that I've seen used the most in the utility sector is what's called predictive maintenance. So usually that means setting up your operations in a way that allows you to see what particular instruments or technologies are operating at their optimal value and which ones may be lagging. And when you see a lag or some kind of drop in performance, being able to proactively address that, that actually saves a significant amount of costs. I think that number two, it's the same customer engagement technologies and tools. So recommendation engine, forecasting, improving the customer experience, even if it's through a ChatGPT type of interface where it's just a portal where a customer can ask a question and get an answer. So those are probably say the customer and predictive maintenance are the two big areas that I see where most of the utility operators have actually made a bet on AI, and I suspect it's beginning to show value, and that's what you're seeing in the market.
And I did have to ask you about utility operators just because the energy consumption based on artificial intelligence is considerable. So this is something that we are keeping our eyes on, especially from an environmental cost as well. So before we wrap up the discussion, I do want to ask you, are there any additional areas of the market that you think are ripe for disruption in relation to AI?
Sure. I would say perhaps somewhat controversially, Remy, that ultimately my advice is don't invest in AI. Invest in problems that AI can actually solve. So first, look for companies where you understand the industry and you understand the core challenges of the industry, so you can actually evaluate correctly whether AI is solving problems in a real way. Avoid any place that throws AI at everything. Um, Pay attention to the human side. Are there machine learning engineers? Are there citizen data scientists in the company? Does the executive team understand how AI can be used to make decisions better? And all of those are really strong indicators of differentiation between a player that's simply using AI as a band-aid or a brand enhancer, as opposed to a player that's actually using it to create value. And today, as you mentioned earlier, the landscape is evolving very, very fast. So the hidden source of value to me are to find out players that are really adaptable to change. So this is maybe to paraphrase Peter Drucker, right? The best way to predict the future is to invent it. So what are the companies who are not just trying to stay up with the latest technologies and innovation, but which companies actually are creating new technologies, creating value in different ways, customer experiences. And that's where you'll find the visionaries, and that's where you will find value.
And last but not least, before I let you go, Alex, because you highlighted the 3 Ps earlier and you mentioned people, process, and proof, when it comes to the people part of the equation, you also talked about training of people. And we know that talent retention is key for organizations around the globe. But when it comes specifically to getting not just executives, but people in all departments of an organization up to speed in artificial intelligence, what have you found to be the most helpful as well as really effective here?
Sure. So I think the most helpful thing is to make training easier. Make training something that is part of the everyday, part of your business as usual. I think in general, people want to learn. People realize that the technology change is creating a huge gap. And if they don't keep up with the new technologies, their marketability and their ability to provide will drop. So I think people in general are very eager. And it's really just an opportunity to bring the right training to the people. I've seen companies very effectively do that when they're actually doing it, not by having theoretical training, but actually bringing in a professional to do real training on their data, solving their problems. So as opposed to watching a video online that is supposed to help you create a better report in Tableau or Power BI, instead open up a low-code, no-code solution that are now very prevalent in the industry, and let's go and start experimenting. Let's drop some data. Let's see if we can build a recommender model. If we can, let's see if we can make a forecast for a particular industry or maybe for a business unit within your company, and actually integrating the training into your everyday business process, making it part of really your continuous journey, not as something that is aside and separate and something that you need to do in order to be compliant with regulations. That's the difference I've seen. More transformational, less informational learning. And transformational learning comes from doing things, not just watching videos and reading things. So the more I've seen companies engage and bring in the training into the company, the more I've seen the results actually stick and show up in the value created for the firm.
Well, it does sound as though when it comes to training, you're also saying that intuition and interaction are key. Also, Alex, thank you so much for joining us for today's discussion. I think all of your insights will be helpful for a viewing audience. So thank you and have a wonderful day.
Thank you, Remy.
And that will do it for Global Money Talk live from the New York Stock Exchange. We're so excited to bring you daily coverage here on SamPro TV. You can check out the show anytime on our YouTube channel by searching Global Money Talk. Thank you for joining us. We'll be back bright and early tomorrow morning. Have a wonderful day.